Good evening, good afternoon, good morning, everyone, depending on where you are. Welcome to FNA's 14th FMI Broadcast. We're going to allow people to enter the room, so I'm going to start in a couple of seconds. Thank you. Okay, now we have many people in the meeting, so I think that we can start, and we are going to start as usual with a thank to you for supporting our events. You know that we put much effort in having prime co-speakers for having very interesting conversations about thought-provoking topics around FMIs in this case, or in the Treasury or CBDC, depending on the broadcast of FNA that we are talking about. Today, we're going to have a little twist in the scheme of the broadcast. Today, we're going to have a fireside chat, and our speaker, it's not co-speaker anymore because it's Dirk, it's our invited speaker. I'm going to be like just leading the conversation a little bit. It's Dirk Bullman. I'm going to introduce him in a couple of seconds. So as you all know, the FMI broadcast follows a 60-minute format in which the first 40 minutes is going to be about some question that we have already prepared and that we think will bring a lot of interest in the conversation about the topic that we have for today, which is discussing atomic settlement. Afterwards, in the last 10 or to 20 minutes, we're going to have the question and answers. So for those who are interested in sending your question and answers, please do it, but do it on the Q&A functionality. Don't do it on the chat, because on the chat, it will get lost, and that's it. So first of all, thank you, Dirk, for being with us today. Before presenting you formally, I'm going to present FNA very briefly. For those who don't know FNA is a leader in advanced network analytics and simulation. FNA is a software as a solution platform, which is used to uncover hidden connections and anomalies in large, complex data sets, to predict the impact of stress events and to optimally configure financial systems and infrastructures. As you can see on this slide, in these icons that we have to the left, to the right of the slide, FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures as well. So now, finally, I'm going to introduce Dirk. Dirk is Global Head of Public Policy at CLS Group. Dirk joined CLS Group in 2022 as Global Head of Public Policy and is responsible for formulating, developing, and implementing the global public policy strategy. I'm going to join in this fire chat. You know me, most of you know me. I'm Director of Financial Market Infrastructures and Digital Currency Solutions at FNA. And I'm one of the subject matter experts on network analytics for payments and financial market infrastructures at FNA. I'm very happy to be with you here. Dirk, now I give you the opportunity to talk. First of all, if you would like to present yourself, and if you want to give any disclaimer that you deem necessary, this is the right moment to do it. Thank you for being here, Dirk.
Thank you, Carlos. Thank you very much for having me. Yeah, my name is Dirk Bullman, and Carlos already briefly introduced me. Maybe when I introduced myself, I think in our typical jargon, I would normally qualify myself as a plumber. I'm a payments guy. I've been the payments guy for almost my entire professional life. Here at CLS, I'm the head of public policy. I'm heading the CEO office, and part of the portfolio is corporate strategy and innovation. And I think it's in this very context that we are discussing today. As was also briefly mentioned on the slide there, before joining CLS 1 year ago, I worked at the ECB for around 2 decades, and also in the field of payments, market infrastructure. I worked in operations, in policy and projects, and the last few years, mainly on innovation. So everything around, discovering the beauty of blockchain, crypto, stable coins, and then central bank digital currencies. That was what I did at the ECB. Well, and that's about it. That's me. I don't know, Carlos, if you would like me also to explain briefly what CLS is all about. I understand that we have an expert community joining, but I
No,
could also explain briefly.
I think it makes sense to explain a little bit what CLS does. If you want to do it now, that's perfect, I think.
I think it puts things that I say later maybe into perspective. So CLS, because I said I'm payments, but I understand that CLS is in the payments niche, and for many people, payments is already a niche. So we are in a niche of a niche. So we are the settlement backbone of the FX market, which is the world's largest financial market. So we settle an enormous amount of money every day. It's 6.5 trillion US dollar equivalent. So it's a number, it's a 12-digit number that we settle every day in 18 currencies. That may not sound a lot, but these are the world's largest currencies and representing around 90% of the FX market. And we have more than 70 settlement members, but indirect participants, if you count them as well, we have more than 35,000 institutions that we can reach and that can reach CLS. So what we do is actually, and that's maybe then also the segue into what we are discussing with atomic settlement. We do settlement, we do payment versus payment settlement, one currency against the other. And this is, PVP actually means you pay and you get paid. So all this happens at the very same moment. So this is what PVP is all about. But maybe I stop here because we will cover many of the topics I understand during our conversation now.
But that's a very good introduction, and that will allow me to introduce a little bit about the topic that we're going to cover today, which is, as you mentioned, it's atomic settlement. At the end, and this is a rather new concept, this atomic settlement thing, which promises simultaneous transactions. Instant and simultaneous transactions. That's like the value proposition of atomic settlement, and many regard atomic settlement as a quantum leap for post-trade efficiency, but some people also say that it may turn into a liquidity trap for financial institutions or for anyone who is going to use the atomic settlement. So the idea today is to discuss the potential benefits and drawbacks of atomic settlement, because I have the sense, and this happens a lot with DLT, blockchain, crypto, financial inclusion, and so many topics, that everyone sees that all the good about it, but no one talks about the subtleties, no one talks about the risks and the costs that it may bring to the table as well. So I think that's the main idea of our discussion today. So Dirk, once again, I want to thank you for being asked today to discuss from the CLS perspective about atomic settlement at the end. You already did a very good job in introducing yourself and what you do. So I think that we can jump at once to the atomic settlement. And this is something that you have already written about in one document that is published, and it's publicly available in the CLS website, in which you trace the origins of atomic settlement to crypto and blockchain. For those which are not very familiar with atomic settlement, what does this term mean, and how has its meaning evolved when applied to post-trade and FX settlements? I think that's perhaps a very good first question.
Thanks, Carlos. What I will do now, I will offer my perspective. So this is my view of things. This is my reality and my truth. But maybe there are some variations to it, and maybe other people perceive things a bit differently. But the fintech ecosystem is an extremely vibrant ecosystem. I'm stating the obvious thing here, and I guess many of you, like me, follow with great interest all these experiments, proof of concepts that we see, and in the field of DLT, central bank digital currency, cross-border, and the word atomic surfaces quite a lot in the literature and in the documentation that are published around these experiments and proof of concepts. And even sometimes it's said, okay, this is a key advantage. This is a key feature of the experiment. And then I I did some head scratching. I asked myself, what is atomic settlement? I mean, what is it all about? Because if you do a bit of etymology, atomic, it derives from the Greek word atomos, which is indivisible. Fine. So something happens or doesn't happen. And I understand that the whole concept also originated from atomic swaps. I think it was in 2000. It was 10 years ago, for sure, 2013. Also, where one crypto asset needs to be exchanged against another crypto asset or another blockchain. How can this be done without third-party involvement? Voila, this is atomic. These are atomic swaps, and this transitioned into the atomic settlement world somehow into this term. So what are the attributes really of atomic settlement? And here there's no defined, no really agreed definition. That's maybe one of the biggest challenges here. So I think one attribute and one feature is for sure that it's simultaneous settlement, atomic. That means either it happens or it doesn't happen. And then the original idea was that it's happening across ledgers. So it's a cross-ledger thing. But look at what people now write nowadays. So it can also happen on a single ledger. Even if on a single ledger there's a transfer of assets, sometimes it's considered atomic. For me, this begs the question. CLS is one example, but other systems are also good examples there. If something happens on a single ledger and either a transfer happens or it doesn't happen, that's called PDP. That can be called DVP. So it exists. So I would argue that atomic settlement on a single ledger already exists today. Okay, but that's not the end of the story, because then you look at other attributes, and over time, I think you mentioned that, Carlos, at the beginning, atomic settlement is also kind of instant settlement. And of course, many instant settlement or faster payment systems, as we call them, or as the CPMI and others call them, they already exist. Around more than 60 exist. So also here you could argue atomic settlement in an instant way. It also exists. So, I think what I would like to say, and my only point is here, we should be maybe careful with this term. We should have a close look at what we are talking about, and then to see what exists today and maybe what is novel. Because very often it can happen that maybe atomic appears as something novel, but maybe eventually isn't. So that's my only point in the context of atomic settlement.
But I tend to agree with your point. I would say that atomic settlement is a catchy word for something that we already have at the end. And something that perhaps we will enter into a discussion later on has to do with perhaps that financial institutions do not settle their things instantaneously. It's just a market convention. I mean, they don't want to do it. That's it. I mean, it's not a technological feature or a technological advance at all, having a blockchain or DLT or whatever solution that allows atomic settlement. Because in my view, and that's one of the things that I would like to discuss at the end, is atomic settlement is pure RTGS at the end. The thing is that you receive it right now. I mean, the system receives it, processes it right now. It happens or it doesn't happen if you have liquidity enough to do it. That's it. It's an RTGS. And there are many RTGS which are T+0 and they don't have T+1 or T+2, but it's instantaneous as long as there's liquidity. So at the end, it's some form or some variation of atomic settlement or the other way around. I think that's a good discussion to have at the end, because many people think that atomic settlement is something which is innovative or it's new, but I think that many things already do that very similarly.
Yeah, couldn't agree more, Carlos.
Good. So, and this is where I want to introduce this T+1, T+2, which is a topic which in financial market infrastructures circles, it's resonating a lot lately, which is most of the systems right now are T+2 or T+1, but many of them are going from T+2 to T+1. Are those systems, those settlement systems, capable of achieving real-time or atomic settlement based on the technology they have? Or is something that would require DLT, blockchain, or some other new form of settlement or technology that allows settlement?
So the short answer to the first part of your question, are the existing systems capable of doing already something? The answer is yes. And the second part of the question, do we need something like DLT for this very purpose? My answer would be no. But maybe let me go one step further, one level deeper into the topic. It's very interesting because I sometimes read that in the FX world in particular, there are some inefficiencies. Certainly there are some inefficiencies, but the inefficiency that is often pinpointed is that settlement takes 2 days. This is the T+2 convention. So between the trade and the settlement, there are 2 days. So this is inefficient. And then the statement is made, okay, but with new technologies like DLT, you can fix that because then you can settle instantaneously. I feel that there's a bit of a disconnect, or maybe even confusion, if you allow me to use this maybe strong word, between what is a settlement cycle and what is actual settlement. Because what we have is a settlement cycle with a T+2 or T+1. That means there's an agreement on the trade, and then 1 day or 2 days later, there's the actual settlement. But actually, there's nothing broken here. It's just a market convention. This is the agreement that people have reached, or even, I mean, in the securities world, is a rule. Now that you need to settle within this time frame. This time is used then by the participants, by the back offices, to mobilize the money, to exchange then, I don't know, messages, matching, things like this. So this is the market side, but this is pre-settlement. So this is post-trade, pre-settlement. That's this phase, and existing technology can do that. It already does it today. We do that today. So if you ask, I think my plea would be here: we need to have a stricter separation between the settlement cycle and the actual settlement, because settlement already today happens within minutes or seconds even. That's what, for example, also our system is capable of doing. But if you allow, Carlos, on the DLT story, because I find this very interesting. I don't know if we have also time to touch upon this, because it's always interesting to look at DLT in the context of this discussion, because what is the premise on which DLT is often built? It's cutting out the middleman, changing the ecosystem, simplifying things. You don't need financial intermediaries, but it's exactly these intermediaries, like us, for example. No, we are experimenting with DLT, with the technology. So, and then we change the premise in a way that we say we don't cut out the middleman. We don't make ourselves superfluous. We look at DLT as a technology and compare to, and in this perspective, we have to compare it to traditional technology. So it's maybe just another technology. What maybe the original idea was with when the white paper came out in 2008, the Bitcoin white paper and so on, was really to change something, to cut out the middleman, middlewoman. But this is not the question. And when you compare traditional technology and DLT, and I think this is what we have to do here, also in the context of atomic settlement discussion. You have to see, is DLT better than traditional technology? If you had asked me a couple of years ago, maybe I would have said DLT is not ready for prime time yet. Maybe today, I mean, things have changed over the years. The DLT has improved, but maybe it's at par. Maybe it's as good as traditional technology. But I must also say it's difficult to compare, because there's not one traditional technology and there's not one DLT. You know, I think today we have 30 to 40 different DLTs which are actually being experimented with, and even in live operations already. So we have to really see what the technology can do. And I'm also very careful when people then say, okay, when it comes to speed, blockchain is maybe not, or DLT is not as good as traditional technology. When it comes to resilience, it isn't. I mean, you really have to look at the features of a technology. Speed, for example, I think many DLT solutions have proven that settlement can happen in the blink of an eye. And there are additional layers which you could put on top, like Lightning, where you have off-chain channels, or you have sharding, where you just create breakdowns of a blockchain into similar separate chains. So all this is possible, and fast settlement is possible. High throughput is possible. While on the resilience side, I would also be careful. I've seen a couple of blockchains where there are single point of failures. If you have a certification authority, for example, in between, you should also bear in mind that the attack surface increases. And not all information is maybe systematically mirrored across nodes. I mean, then you can ask, okay, how resilient is it? If one node is down, can the other take over? So we have to have a very nuanced view on what DLT can do. But for me, sorry, I have to circle back a bit, is really, we have to look at it as a technology, compare it to existing technology in the existing ecosystem role. It's a whole new discussion if you say you want to change the ecosystem and whether DLT is a better fit. But that's a whole new discussion. This is maybe not so much what existing experiments and what existing solutions are all about. So this is my 2 cents on it.
I'm glad that you circled back, because I think that the argument that you gave at the beginning, that we have to differentiate between what is the settlement cycle, which at the end is a convention. I mean, market participants convene what the settlement cycle is, and the settlement technology is something different. If we're going to compare DLT blockchain or the legacy form of centralized ledger technology, we're going to have to compare those technologies par to par, without taking into account, obviously, the settlement cycle, which is a convention. If we have a T+2 convention and use DLT, it's exactly the same. I mean, it could be exactly the same. So I think that, and there are very good examples. For instance, in Colombia, we have in the RTGS is T+0. I mean, and it's a technological marvel. It is not. It's a plain vanilla with some liquidity saving mechanisms. RTGS is nothing fancy. It's nothing DLT. It has been T+0 since I was very young. I can't tell you really when, but since I joined the central bank at some point of time in like 2005, it was already T+0. So it's not a marvel, a new technological marvel. So I think that separating the technology from the convention is right spot on. That's something that we should take home as a good take home message. So going forward, when do you think that atomic settlement is most useful? Because obviously there should be some good use cases, and when it may be an overkill for the transactions or for the market.
Okay, atomic settlement. Maybe we look at atomic settlement. Maybe what's the meaning? So I mentioned the different attributes. So it's instant. Let's assume it's instant. Settlement can be single, cross ledger, whatever. But it's instant, simultaneous. Settlement, and allow me to look at it through the FX lens, because this is my business. Because when you think of atomic in the sense of instant settlement in the FX world, you might think, okay, we need to have that. We need to have also instant settlement in the FX space, because it's maybe intuitive to think that, because we live in times of accelerated change and everything is accessible within second, information, videos, and so on. So payments, retail payments, happen within the blink of an eye. That's the way it is. But the FX world, I would argue, is a bit different. I know that when you also look at the different experiments, you often see that there's Alice in country A sending money to Bob in country B. So this is a bilateral transfer where FX conversion happens in the middle. But I think the FX world, as we see it, and I thought this is maybe a bit of a nerdy view, and it is a very specialist view, but the FX market is a bit different, because it's not this bilateral on the fly payment where you have an instant payment. In the FX world, normally everything is multilateral. You have many players, big FX banks and so on, Nostro agents. You have multitude of players that interact with each other. And my main point being, does it have to be instant? What is the underlying business? so it's international trade, import, export. It's also hedging, so currency exposure, how to manage that. And very often, this is nothing that really needs to happen instantly, because this is well planned. This is already something that you see coming. So in the FX world, do we need to go to instant? Do we need to go to atomic in the sense of instant? And then you read what people write. I with a lot of interest. There's one maybe we can put it in the show notes. I don't know. There's one report that the GFMA, the Global Financial Market Association, published in summer, and they really clearly say that T0 they are the specialists. This is a niche market, maybe for time sensitive FX transfers for international. Maybe this is necessary, but it's not mainstream. And if I may say, we also have a product portfolio with CLS. We also have one service which is called CLS Now. So we can offer this instant settlement, but it's not used a lot. So that we also see that maybe there's not so much of a business case. So if you're gonna, so what I want to say to conclude on this point, is atomic useful in the FX space? If you think of atomic in the sense of instant, I would argue it would, from today's perspective, maybe not. And it would also require maybe a big ecosystem change if you do that, because of what we discussed earlier with the T+2. And so there's today some time between the trade and the settlement. If everything collapses and happens at the very same moment, it's a different game, and a lot has to be changed in the ecosystem.
Would you accept if I summarize what you have said by saying that atomic settlement is something that is worthwhile in retail payments, but perhaps is very costly and cumbersome in wholesale payments?
Yes, that's in 1-2 sentences. That's a gift of what I wanted to say. Thank you, Carlos. Maybe with the addition. With the addition that I'm speaking about the FX world. I know that there are many experiments out there on wholesale CBDC, and the way I read it, instant settlement is also one of the features of wholesale CBDC. But that's a completely different discussion. What is the use case and business case for wholesale CBDC? But yes, again, a very long answer to yes. I agree with you, Carlos. Sorry.
And I think that the wholesale CBDC thing and the atomic settlement is something that will depend a lot on what is the other leg of the transaction. If it's securities, if it's sovereign securities, for instance, but sovereign securities are T+2, it doesn't make sense to have atomic settlement if the other leg of the transaction is T+2 or T+1. It doesn't make sense. You would need to have everything, all the securities or all the assets that are going to be like the other leg of the transaction in atomic settlement ledgers, otherwise capable ledgers. Otherwise, it makes no sense at all. I mean, right? So going forward a little bit, and this is something that I know that CLS is marvelous at, which is liquidity savings. When someone reads the CLS webpage, and when I read last time one of the reports, it was like the liquidity efficiencies were. I remember that it's just like 3% of the liquidity required is used to settle. So 97% or so, or something, perhaps my memory is a little bit fuzzy now. It's the liquidity savings. So at the end, does the non-atomic or the non-instantaneous settlement has to do with the liquidity savings, right? I mean, for you to have these liquidity savings, you need to have time, right?
Spot on. Fully agree. Yeah. That's a key point. Maybe if I may illustrate this, when I joined CLS a year ago,
Please.
And then of course as a former central banker, for me of course CLS is there to do PVP, and this means risk reduction. So that means you make sure that there's no mismatch between multi-currency in multi-currency transactions. So that's the starting point. But then you discuss with our clients, and what for them is maybe equally important, for sure equally important, is the liquidity savings that we bring. I mentioned at the beginning that we settle 6.5 trillion every day. Imagine if this money needs to be pre-funded borrowed in the market, and now that we don't have a negative interest rate environment anymore, this comes with high cost. So what we offer is multilateral netting, and we also have additional features which we put on top, which then even bring it further to the 96, 97% that you mentioned. It's up to 99. That means we, instead of mobilizing 6.5 trillion every day, the clients only have to do funding in the range of 65 billion. Still sounds like a lot, but it's only 1%. And so this is really what is important to the market. The liquidity efficiencies are extremely important to the market, and that means atomic settlement in the sense of instant settlement brings challenges. I'm not disputing the fact that maybe we need to accelerate the settlement, shorten the settlement cycle. This is happening already as we speak. But the question is, what is the end game? Where does it bring us? Is it really instant settlement, or do we need to stop a bit before and say, okay, it's close to instant settlement, what you, Carlos, and team have called molecular settlement? Maybe this is something that you come as close as possible to instant settlement without losing the benefits of liquidity optimization.
And that's where I was going, which is our next question is that in fact our let's say our connection with Dirk started with molecular settlement, which is a term that we coined at FNA to explain that atomic settlement perhaps it's not perfect or is not good in all cases. FX is one of those great examples, as Dirk already described, but perhaps we can have like this reduction in settlement time in the settlement cycle, and have it like it could be T0, but with some hours to do the liquidity saving mechanisms, resequencing, orchestration, and whatever we want to use to reduce the liquidity needs for financial institutions. So at the end, this atomic settlement can be transformed or used as the let's say the Lego bricks to build something which we termed molecular settlement, in the sense that instead of having them one by one immediately, we can have like some type of very small delay, as you were suggesting, Dirk. It's very difficult to say what is an efficient time window for doing these liquidity savings, but that's what the molecular settlement is about. It's about having not an instantaneous, but having something very close to instantaneous that will allow a system as or a FMI as a CLS or a central bank to have a settlement window that will allow to have liquidity savings for the good of the participants and the economy as a whole at the end, but not having a T+2 thing that may be too long for today's markets. I think that's the thing about the molecular settlement at the end. Do you see this could play a role in what we are or what the market is going to?
I think yes, Carlos. I think this is an important discussion to have. We need to have this discussion on how to best combine shorter settlement cycles and at the same time not losing the liquidity benefits. And today we have one settlement cycle in CLS. We have a 5-hour settlement window in the morning because of the different operating hours around the RTGS systems around the globe. So this is in the morning CET that we settle. So it's one settlement cycle per day, one settlement window. But we need to think about if we go closer to instant, should we have 2? Should we have 3? Should we have more windows per day? And then, of course, the more we have, the lower the liquidity optimization benefits will be. But I think we should discuss this, whether we have a global system. Should we have one settlement cycle which is more tailored to the American market, the second one more Europe, Africa, and the third one which is more Asia? So this is something we can discuss, and maybe we should also explore it and quantify what is the real impact of moving from a one-day settlement window to multiple settlement windows. This is a discussion to have, clearly.
And I think that's what you mentioned before of the liquidity savings that CLS achieves of 90 9% of the liquidity. I mean, 99% is the liquidity savings. How much that changes if you, instead of having, as you just mentioned, instead of a T+1 or T+2, what happens if we have T0, but with 5 or 4 or 3 settlement instances during the day? How much it will change? That's something that we have to test. I mean, that's something that it's not. I mean, it's not a linear thing. It's not something that we can make extrapolation to find that out. But we have to obviously to simulate at the end how is the, or what will be the impact on that. And there was also a question that I have read from the audience, which is related to something that you just mentioned, which is the costs. Obviously, if you're able to save liquidity up to 99% of the value of the settlement, this is a reduction in cost for financial institutions. But one of our attendees has asked, what about lowering the transaction costs when you use atomic settlement? Do you foresee that there is some reduction in costs when you use atomic settlement at all?
Oh, that's difficult territory. This is something I cannot answer, but I can give you a figure, maybe some food for thought on the cost of our system. When you think about the massive liquidity savings we bring, if you need to borrow the money from the market at 1 basis point of the, let's assume the financing cost is only 1 basis point, which is nothing. This is almost the equivalent of so per day, 1 basis point cost per day almost equals the annual cost, the annual fees of CLS. Just to put things into perspective. So I would argue, but hey, you will not be surprised to hear me say that the way CLS offers the service, in particular in perspective to the savings we bring, is already the cost is very low. And it's a commodity, you know, our business is not very high. The fees are normally not very high in the business, what we do. Look at other systems. I mean, I looked at the ECB, the TIP system, 0.2 cents per transaction. Wow. So, I mean, these are already very low costs. And I'm only speaking about the settlement costs, not about the add-on costs, maybe what the custodians or others put on top. But I can only speak for the settlement engine and for what we do. And I would say the costs are already comparably low.
I would say, and I have no proof, but I neither have doubt that the cost reduction attained by not requiring 99% of the liquidity for doing the settlement should be huge if you compare it to what I think could be marginal savings when you use atomic settlement. I don't see how the atomic settlement will save money at the end, but I would say that the liquidity savings from multilateral netting and some other liquidity saving mechanisms should be enormous compared to those. But that's something that we have to prove. So going to the next one, as we approach our 40th minute in our conversation, I would like to start wrapping up things. So, Dirk, as we wrap up things now, if you look ahead, how do you see the optimal balance between settlement speed and liquidity efficiency? This is something that we have already talked a little bit about. What innovations do you think that will emerge to help strike that balance?
Well, settlement efficiency and speed, if you look at the settlement service as such, is already high. I would say. Innovations, are they needed? Okay, we can look a bit under the hood of some technologies and see whether they can improve something. We discussed that. We also touched upon the settlement cycle, and maybe just to bring it all together somehow. You mentioned at the beginning the T+2. So this is the settlement cycle. So today everything happens. So the market conventional agreement it takes 2 days. We see developments because towards T+1 already, and because T+2 was introduced more than 10 years ago, I think, when many players still use fax machines. Or maybe we don't use, of course, I heard some of them still use surprisingly fax machines, but that shouldn't, I mean, it's hopefully soon be the past. So T+1 is under Portas. It's happening in the US, in Canada next year already. The UK have this accelerated settlement task force. In the EU, ESMA has just launched a survey. T+1 is coming. Then the next question is, okay, what comes next after T+1? And I think the important thing is that's maybe the conclusion of what we have discussed. Atomic settlement in the sense of instant is maybe in the FX world not necessary, but coming as close to this as possible while not losing the liquidity optimization benefit is what we should strive for and aim at.
Yeah, I think that finding that not equilibrium, that balance is something which everyone should try to aim for, right? I mean, because as you mentioned, the liquidity savings is, I mean, the efficiency is very high. The time is still T+2 or T+1, depending on the market. But there should be still like some, I mean, we can enhance the balance still a little bit. I think there are still some Pareto optimum to be reached some way somehow, and I think that's a good way for us to finish our conversation. That there are things to be done. The systems right now are not perfect. I always say that no system is perfect, but perfectible. That it can be a little bit more closer to perfection, but it will never be perfect. So I think that's a good way to wrap up our conversation about this atomic settlement and the molecular settlement. And perhaps we can go through the questions from the audience, if that's fine. First question that I think that is very interesting one is, how does atomic settlement alter intraday liquidity needs or create exposure profiles? Perhaps the liquidity needs we already have discussed, that the create exposure profiles.
It would increase the exposure, yes, but this is something difficult for me to answer, to be honest. We have not thought about this. We have not given too much thought about this. We were very much focused on our own business so far and not so much on the exposure of the participants, but certainly this is something. But maybe, Carlos, maybe this is an area where you maybe are best placed, if I may throw the ball into your camp and to
we can try that. We can try that. Thank you. No, it's something obviously that I think that should be studied a little bit more. I agree. And like connected to this, while you were answering, I think that there are many exposures or risks that perhaps we haven't discussed. I mean, we as a community, let's say, discussed enough. For instance, atomic settlement increases settlement risk or decreases it? We had a discussion within FNA with Kimo about this. Atomic settlement increases or decreases settlement risk? What do you think?
In the strict sense of, I mean, the strict definition, I would say it cannot, because everything happens, either it happens or it doesn't happen. So this is what atomic settlement is also all about. So I think the way we do things at the moment and the way we settle at the moment, I would say from the settlement perspective, it would not increase risk. It would mitigate risk the way PVP, DVP, and other settlement services and functionality mitigates risk. But if I might, sorry, I know this is, but if I'm also allowed, if you said you discussed this with Kimo, I would love to hear more about how you feel about it, or whether you believe I now gave the wrong answer to the question.
No. I think there are no wrong answers right now. There are just answers because we have to test that or to study it a little bit more. At the end of our discussion with Kimo was, as you mentioned, it happens or it doesn't happen. I mean, it's 1 or 0. If you have enough liquidity to make the settlement, it happens. If it doesn't happen. So the settlement risk could be increasing because as you don't have liquidity saving mechanisms, multilateral netting or something like that, it's most likely, or there's a higher likelihood that a payment will not go through or will not settle just because at that precise moment that it was being processed, there was no liquidity.
heard an interesting argument the other day that people say that, or someone said, well, with instant settlement, you would not increase liquidity needs, or you would not create scarcity of liquidity or liquidity challenges to any player, because you increase the velocity of liquidity, so you create infinite liquidity. And that was an interesting thought. I must say, I just absorbed this, but I have not yet reflected on it, whether there's truth in it. Maybe you have, but that's interesting. Certainly, that's an interesting debate. But what we're discussing and what the question from the audience shows that we are maybe at the beginning of all this, that we really have to reflect on all these points and these very great comments and questions.
In fact, we have also discussed that one, which is because we also had a friendly discussion in LinkedIn about some people saying exactly what you mentioned, that this will increase like the velocity and will make the what was the name, like it was something related to the virtuous circle of liquidity going faster, so everyone is going to receive liquidity faster, so we'll be able to use it faster. But that's a big if. I mean, if we don't know how the liquidity is going to arrive to each one of all participants, so the possibility of a gridlock or a deadlock, I think it's higher, in fact, because we don't know. I mean, it will depend on the sequence of the payments at the end, and that's something that we have learned at FNA a lot. The sequence of the payments is the key. If the sequence of the payments is not the right one, that assumption that the virtuous circle of liquidity will make everything work well, it doesn't hold. And I think that in FX markets, this will tend to be true, and I have no proof, but because of the time zone differences, if all transactions dealing with yen happen at some window, and then British pound, and then US dollars, things are not going to be able to be net. People are not going to have this virtuous circle very easily in their liquidity balances. So I'm not sure. I would say that's a false claim, or at least it's to be proven claim.
That resonates a lot. What you just said. The FX market is a very complex market. There are so many players. It's a fully decentralized market. No, it's not. But this decentralized thing, it happens around the globe with a multitude of players involved. So I fully concur with what you said. So gridlock, and maybe that the risk that some players don't get the liquidity they need at the right moment. That's certainly a risk. So, but interesting point to be further reflected on.
One of the next questions, and feel free to, let's say, not reject, but dodge the question if you feel like it. It's, is CLS and SWIFT business under threat with atomic settlement?
I would say, but maybe other people see it differently. I think we are not, because we already, I would say, depends on the definition, we already offer it. Even if you add the instant dimension to it, we offer a service which is called CLS Now. But as I said, this is not really used a lot today. So I think we are positioned there to do what is needed by the market. By the way, this discussion around T+2, T+1, T0, what we do is settlement. The guys that maybe have to do most of the work, these are the back offices of the banks. They have to make sure that they can compress the processes and increase efficiency, and make sure that if necessary, trade and settlement coincides. We only do the settlement bit, and we can do that already today. Already today, we can settle T0, and we can do instant settlement and atomic settlement. Therefore, I would argue we are not under threat. And I don't want to come across as the arrogant guy who has all the answers here. And this is why we are studying this. No, and that's why we are also having the discussion with you, Carlos, with FNA, with others, because we need to understand whether what we think is the right thing, or whether there are different perspectives, like the one that increasing velocity, for example, it creates infinite liquidity. These are all valuable points that we need to discuss. But my perspective today, that's the answer I can give.
And that's great. I have one of our guests who's sending a question to me, but I think that we both could or should answer it, which is, you mentioned that real-time atomic cash settlement doesn't make sense without digital assets for atomic DVP, which is something that I mentioned, that it doesn't make sense if one of the legs of the transactions is not able to do atomic settlement. Well, it doesn't make sense to have an RTGS, for instance, with atomic settlement. So the question goes, aren't there sufficient benefits to offering real-time gross DVP to pursue the digital assets ecosystem? What do you think?
I could easily dodge the question and say I'm not a DVP guy, I'm the PVP guy. But I think that's an interesting and very valid question and point to make. But maybe there's also a connection between the DVP and the PVP. There's this discussion around tokenization of assets happening. So I think this is one of the main business cases that is used in the wholesale CBDC discussion, for example. No, yeah. Even if we in the PVP world think everything's fine, we can live with what we have, but maybe if in the DVP world you create something like wholesale CBDC, which is used to exchange tokenized assets on a blockchain, it will not leave the PVP world untouched. So if you have cross-border transfers, for example, I mean, we see this with the move from T+2 to T+1 now in the US. The Europeans, they look carefully at it because more than, no, I think around about 20% of all US securities are held abroad, to some extent in Europe. So if we want to settle this and they shorten the settlement cycle, and with the time zone difference, we need to carefully look at what that means for us. So we have less time to buy securities which are in the US, for example. So all this is intertwined and connected. I think I just realized in the way I dodged the question because I didn't give a clear answer, but I just maybe added a facet to it.
That's fine. Next question that we have from our guests is, what would you comment on innovation progress with atomic settlement, I guess, and how it affects operational, cyber, and data management, I guess, in financial market infrastructures? I mean, is there, I would say that is there any changes in operational, cyber, and data management because of atomic settlement, perhaps?
Maybe not because of atomic settlement as such, because I think sorry for repeating myself, because I think it's there today. It's just maybe if you look at the different technology, maybe if you use DLT, maybe then that's a different environment, and then you arrive at these questions. But I don't know. I'm not sure I can give ad hoc a clear answer to that one.
Okay, let's go to the next one. Do you think that central banks, which are modernizing their RTGS settlement systems and are supporting instant payments, do you think that they should study atomic settlement capabilities or incorporate? I think it would be better to incorporate atomic settlement capabilities.
Who am I to give recommendations to the central banks? But I think I would say they already do. You see what they already doing. All these experimentations. The ECB has now created this contact group with an industry group, the New Technologies and Wholesale Contact Group, which is actually about wholesale central bank digital currency and about DLT. So I think this is all studied and this is being looked at. So the merits of instant settlement, atomic settlement, in particular in the wholesale sphere, is carefully looked at for sure.
Good. We're going to have the last question, which is a very broad one, which is, are there any regulatory barriers to atomic settlement in the financial system today?
I think this always also comes down to the technology, maybe more than anything else. So, but I would say maybe regulation is always it's same risk, and then also the same measures that need to be taken. So if we keep the atomic settlement the way we do it today intact, when we go to new technologies like DLT, then it's the same risk, I would argue, and then maybe from a regulatory perspective, it would be quite similar. But of course, there's a whole lot of other discussion around it, and this is what's happening around DLT in particular now here. I'm in Europe, so I work for CLS, but maybe I should have said that I'm here in Germany, and I have maybe also a closer look at what's happening in Europe with the pilot regime, for example, of the Commission. And there I see that all these things need to be carefully looked at in the context of DLT.
Thank you, Dirk. This was the last question. It's 9:56 a.m. here in Colombia, so we're about to close. So thank you for joining the FMI broadcast number 14. Thank you very much, Dirk, for sharing your thoughts and all your knowledge about this topic, this very interesting topic. I'm sure that we're going to have you once again here, or perhaps in the CBDC broadcast as well, because you mentioned that those topics are also in your radar, among your interests. So thank you once again, Dirk, for joining us today. So if you want to get in touch with Dirk, with the CLS group, or with myself, in the slides that you're watching on your screen, you will find the LinkedIn links when we share the slides. And please keep in mind that next week we'll have the last session of broadcast for 2023, in which we're going to have a Cambridge Subtech Lab and Qatar Financial Center in the Subtech broadcast number 10. That's all for today. Thank you very much, everyone, for attending. Dirk, once again, thank you. And I hope that we're going to have you once again here next year, perhaps.
Thanks for having me.
Thank you, Dirk.